Hey guys, Mike here. So here we are, the last day of 2022 in the stock market. Do not forget, we're going into 2023. Monday, the stock market will be closed in observation since the first actually falls on this Sunday. And so don't forget that. But I figure we recap a little bit about just look at it and have a visual of what actually took place this year because it was a year of first, right? I mean, it's the year that probably you'll never forget, I don't think. If you keep your memory and you stay looking at the stock market long enough, you'll always look back at this, right? Same people, when people who lived through the dot-com bubble probably look at that one and go, ooh, well, this is that year, where it was literally a year first, and I will show you. And then some surprises that, might surprise you. I know it did me. And, then we're going to talk about what happened today in particular, which I found very interesting. It's no surprise. And this is something where really a lot of discussions going on at the Discord and stuff about this, really trying to put the dots together, because there is a way to put the dots together to help us and not only trading but investing as well. And then I'm really going to end with one thing I am extremely grateful for. The biggest thing I learned this year, which I'll take forward with me, and then the biggest mistake I made this year, maybe I won't call it regret, but probably a mistake, right? And I'll end with that, and hopefully you can share in the comments as well, right? And so if we go in here, you can see just a recap real quick, and obviously the SPY's down almost 20% for the year. Qs are down 33. Small caps down 22. SMH down 35. IBB down 14. And if we just go down a little bit, you can see XLE is the big winner of the year, right? 58% almost. Bitcoin down 62. So congratulating everybody who piled into energy stocks. And then, of course, if you look right here, it's like, wow. I mean, like I said, year first right here. Global bonds and stocks see biggest ever loss in market value. And look at that, how far down that is. And here's 08 over here, guys, second worst, right? And actually, I guess, is that 2020 right there? Yeah, 2020 was, the 30-day move was worse than 08. But, it was like almost twice as much as 08. That's amazing. And then here, from Amazon to Zoom, technology got obliterated. Amazon down 51, Airbnb is down 51%, Netflix down 54, PayPal down 64, Zoom down 65, Meta's down 66, Tesla's down 68, Rivian, I don't know why they put that on here, but down 83. And then what might shock you, surprised me the most, ARK Invest still ended up the year with more inflows than outflows. And you can just see right there, all those inflows, people still piling money into ARK Invest. Just had that 1 month where there's a lot of outflows, but in the end, she still got a lot of money to scoop up coin and all those other stocks. And if you don't think it's getting worse, let's just keep things in perspective, guys. Coming into 2023, here we are right here compared to all the other bear markets. And you can see, what are we going to compare? Look how far 2007, 68, 80, 73, 2000. These things can get long and drawn out, and it can go down farther. This has been the most organized selling I've ever seen, right? I've studied these charts religiously, and it's just amazing how organized it is. And really quick, I did want to touch base on this for some of you guys, because I know I see it in the Discord, you guys send me emails, I see it in comments. Going into 2023, I want you to think about it. It's too late to do anything about it now if you haven't. But if you're sitting there with stocks that are down a lot, 70, 80, 90%, and you haven't averaged down yet, and you have no plan to average down, you need to understand how long it's going to take just to get back to break even. And then I'm going to make a comment right after I show you this. But, take a picture of this. I'm definitely going to put it down in the education section for people to see. But, if you're down 70%, it's going to take 233% just to get back to basically break even if you're not averaging down on these stocks that you're holding. And so it's important to understand that. And if you're sitting down 80%, you need 400% return to get back to break even. And then if you're down 90%, you need a 9x, 900% return just to get back to break even if you're not averaging down into those stocks. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And just a final reminder that this deal from Seeking Alpha will be done in 24 hours, the 31st at midnight, I believe. Going for $39 for the full year subscription. Normally goes for $239. And if you've never seen their site, so I guess that's what, $3.33 a month or something like that for the first year. I like the trending. I like the top stocks, the latest news. Helps me do my morning brief. And then stock ideas, which all of us need, and because you can put in and do your own searches and things like that. And then, of course, education, I am huge on. So if you're interested, just look down in the description, hit that link, and sign up. Again, it's over tomorrow. And I bring that up because I think you need to take a step back and just ask yourself, like, one, why am I not averaging down? If you don't have a plan to average down, do you still believe in those companies? Because when they're down that far, if you hadn't averaged down yet, or you don't plan on averaging down, you got to ask yourself, why are you holding the stocks? That's really the question I would have, right? And so now let's get into what happened today, right? I mean, I think a lot of people thought the day was going to be green because yesterday was green, and end up we went red immediately. And I just found it kind of funny. We gapped down. I mean, all about the gaps, right? And you see that gap down, and we go down all day, and we're red, and we're kind of volatile. And all of a sudden, it hits a certain time. And, you know, I put this in the Discord every morning, and I'll show you this. Max pain on the SPY is 383, right? It's weekly expiration when this really matters. And you see those three big spikes right there? And so in the morning news brief, I started adding this in every morning, but it really matters on Fridays, and especially on quad witching. But here it is, max pain at 383. But I said, understand there's a lot of puts at 360, 365, 375. So anywhere between 382 to 390 is ideal for the market today. And there was orders sitting there waiting to be filled or whatever. But you see what happens around 1:30, 2 o'clock, all of a sudden you get this rally into the close, and you're like, wow, it's over 1%. Oh, how about that? I can't believe it. What just happened? And then I ran across this. This came in around 2 o'clock, so probably hit the tapes around, honestly, 1:45-ish. And it says there's rumors that JPM just rolled their collar trade, which I'm not going to talk about. Somebody sent it to me. Feel free to look it up and try to get your head wrapped around what that is. But let's just say it's a big call, right? So it's a $374 million call at around, again, 2 o'clock. And so you can see right there, their strikes 3650 is a call, spots 3,810, 23,000 contracts for 374 million, as you can see. And I just find it funny that as soon as that hits the tape, all of a sudden, here comes the market. It comes down just a little bit and then starts to rally, right? And it could be a coincidence that that happened, because if the strike was already way down anyway. I mean, these people were way in the money. They made a bunch of money on this. I need to go back and look at the other charts. I just didn't have time today to see, like, just to compare that price, that strike price and stuff. But I just think I just don't believe in coincidence, and I don't think it's any coincidence that we rallied after that came across. Because a lot of times that's what you'll get is these, you know, the whales coming across. This happens in crypto a lot, where you get these major purchases. In this case, it's options, and all of a sudden the market just rallies up that, right? Because it's bullish, woo, move it up, and all kinds of stuff, and it takes place behind the scenes and stuff. But the thing we got to look out to, and I talked about this yesterday, for 2023, and it's kind of amazing to think about how much these big firms are talking about. There's going to be, you know, the earnings are going to fall off a cliff in the first, maybe second quarter, right? But then when you look in Europe and here, and Europe to me has got it way worse than us. You look in 08, what happened? The expectations were really high, and all of a sudden, boom, fell off a cliff, right? Well, if you look over to, you know, 2019, 2020, right, same thing you see happen over there. And then look where we're at now. Look at that. That is the estimates for what we're supposed to be doing. They've barely come down in Europe, and they got it way worse because of their energy stuff they got going on, the stuff with Russia. Their inflation's higher, right? Their governments are a mess, just like ours, trying to run it and fix it. And you look right there, that's not good. There's no way that's realistic to me. And when you look at that chart, you can see, like, we've been here before, right? The estimates were just all high, and all of a sudden they just fall off a cliff. So that's what I guess the big money is expecting to happen in the first and second quarter, most likely the first quarter, what they're saying, not this quarter we're fixing to report. But obviously, I mean, I'm not sure why these analysts who make up these estimates, what they get paid to do. I don't even know. I can't figure it out, because you can see repeatedly this is what's happening. You can see repeatedly this last year they've been so far off the mark, it ain't even funny. And I understand with this economic data and the Fed and everything else, you know, and that's what else we got to look forward to when it comes to 2023 is what is the Fed going to do. And I'm going to come out with a video detailing about that, because we've been having that discussion in Discord too, is like, when we're talking about what stage we're in the business cycle, and somebody put it in the comments, and they gave me more the idea to say, you know, I'm going to talk about, can we even have a stage one before this certain thing happens? And I'll show you in the charts, kind of show that might be the case, right? And just to clarify, as I misspoke in yesterday's video. Yes, the 3rd and the 4th still count as the Christmas rally. It's like the last 7 trading days, usually from the 24th to the 2nd. But because Christmas and New Year and all that fell on the weekend, then we have to observe the days on the 2 Mondays. It's going to be the 3rd and 4th to be the last 2 days of the Christmas rally. So, and what's crazy, I think this week, aren't we only down like 0.14% or something on the SPY? I think it is. I mean, we really just traded sideways. That's what we do. Up and down, do like this, right? And so, still got 2 more days for the Christmas rally to end positive. We get a big rally or something, we'll see. And so, down in the comments, let me know, what is your biggest regret of 2022? What are you most thankful for in 2022? And what's just one thing? I learned a lot this year, but like just one major thing you learn this year is you'll take forward with you forever, right? And I'll say mine in no certain order. I'll say the one thing I will go forward with from here on out, I'm not riding nothing down no more, right? Soon as we cross that 200 in the weekly and all that good stuff, and I see the macro data, I'm out. If the macro data backs it up, I'm done. I definitely will sell everything I've been holding long term because I can't get any more tax anyway, right? If I held it for a year, it don't matter when I sell at that point in time. But I'm not riding them down anymore. Forget about it. I personally think bear markets are going to come faster and faster because of the debt problems we have, and not just here, but around the world. And so, yeah, I'm not going to ride those down anymore. And if you can stop doing that, it's amazing, I think, what you can save. And so and again, I've learned a lot this year, but that's one thing I will take forward for the rest, right? What I am probably my biggest, and it's not a regret, but it's definitely a mistake where I made was with Google, right? I was good all year. I didn't purchase nothing. And then I think it was July, I believe, or something like that. I was like, well, Google was already down a lot and stuff. And I said, okay. I think, so I went ahead and made a purchase of it. It wasn't massive. I just wanted to get 100 shares of it so I could start selling cover calls on it. But I thought at the time I was fine with it because I had a range I would, average down. But where I made my mistake was I thought Google would be treated more like Apple because it has this huge moat in its businesses with the search engine, with its ad revenue and all that, dominates those industries. And then they buy back so much stock. And so I just thought, oh yeah, especially if they did the split, I thought, oh yeah, this is going to be fine, no problem. Well, I was totally wrong. They got taken out with the trash, just like with Amazon, Tesla, Meta, Netflix. Like they just got taken out with the trash, man. And the two that got left standing was Apple and Microsoft, almost untouched, right? I mean, they're down, but nowhere near what the other the big caps are down, or the mega caps, excuse me. And so that was definitely that one. And that is the only stock I literally purchased, this year. I mean, I stayed true, man. I was like, I'm not, cash is king and all that good stuff. I'm good. I have ranges now set in place where, I'll start nibbling here and there, nothing heavy, but again, that's just where I'm at. Let me know what you think. And then the thing I'm grateful for 2022 is obviously I have a very supporting wife who is very encouraging. And I always wanted to try to build a community, right? I started this freaking channel trying to, help people out the best I could with what I find, just share it right here. Here's what I've learned. Take it, do what you want to do with it. Learn from you guys. Like that's why I read all the comments, emails that come through to me. And I'm only one person who wears a lot of hats. I don't have a research team. I do everything, okay? From filming to editing to everything else. It's all me. And so I stay very busy, but I also love to stay busy. And so, she encouraged me, said, you ought to try to build a community, which I thought about doing last year. And I remember I sent this message out and you could hear crickets, because one thing I learned about a year ago was in the YouTube world, out in the real world, most people just want to be spoon fed at that time. That's when the market was still good. We hadn't fallen off a cliff yet. And then when we fell off a cliff, I said, oh, there's no point in even trying to build a community because everybody's depressed, whatever. And so then, just like in November, I said, she said, you're right, you really ought to try, to really get a group of people together, who not think alike. Some people are going to think alike, but who bring all kinds of different thoughts and beliefs and everything else from around, not just here, but the world, and try to come together and end up coming up with investment ideas and trading strategies and putting stuff like dark pools and options trading and putting those dots together to try to figure out how to make us how to make us better traders and investors and all that stuff, and then be able to take that, more importantly, and here's my end goal for this whole channel, to be able to take that and hand it down to the next generation, right? So they don't have to do what I did and go work 6 days a week, 48 hours a week at a freaking grocery store in high school just to make it through. And then, you know, I enjoyed my military time. I went to the military because I was poor. I needed to be able to pay for college, and I'm glad I did it. You know, I wouldn't do it any other way. But I really didn't have a whole lot of options, right? There was no options, right? And so I want the next generation to have more options, okay? I don't, and I'm talking about, you know, so my whole goal is to help out lower income and middle class people, you know, because let's be honest, it's not like, which I'm going to show you guys next week, the Waltons whose children inherit billions of dollars. They don't have to do anything. They just be born with the name, right? Well, that's not my family. They say keeping up with the Joneses. I'm not those Joneses, okay? And so that's not the way it works. My wife and I work for everything we've got, okay? That's the way it is. And so I at least want my kid to have more options, right? Go to college. Don't worry about having to work a full-time job to get through college like I did. You know, actually enjoy your college experience. Enjoy your high school experiences. Like I tell him, you get to be a kid and a young person one time in your life. That is it, okay? And so I want you focused on that, not sitting there and worrying about trying to pay bills and stuff at 16 or 18 or whatever it is. You got plenty of years to do all that. I will teach you the responsibility of how to invest, how to trade, buy real estate, have rental properties. You're going to know all that. And if you choose not to take it, that's your choice. But the option was there. Okay. And if you don't take it, I promise you, you will look back when you're 40 or 50 years old and going, oh man, I had to go work this job because I didn't have no choice because I didn't listen to dad. Could have had other options, you know? And so that's really the end goal for me, at least. And so that's the thing. I'm getting around very long-winded here. That I'm grateful for is finally there is a community being built where it's really good people, smart people. And, you know, I can tell them, the guys and gals over there, it's your Discord, it's not mine. Whatever you want, we'll put in there. And I'm always trying to come up and subscribe to new things or get this tool and try to put it in there and implement it and, you know, all that kind of stuff. So, and I'm grateful for the community. I'm grateful for you guys that watch these videos and share the videos, you know, and it's been a rough year in the market, seeing everything go down. But trust me when I tell you, eventually, I will make no prediction of when, but when it turns, man, the skies are going to be bright. Anyway, hope you guys have a wonderful weekend, a great new year. Please be safe. And remember, Uber and Lyft do exist. Don't drink and drive. Go out and have a great time. I hope all your wishes and dreams and everything come true for 2023. And maybe I'll see you Sunday. Maybe I'll see you Monday. We'll see. All right. So stay safe. I'll see you later.